Hello guys, today's video is gonna be another stock analysis. This time it's gonna be Pinduoduo. Yes, another Chinese company. But I've spent more than 100 hours trying to understand this company, this high-flying company. Everyone in China is loving Pinduoduo, so what do they do? Everyone knows about Alibaba, JD, Tencent, but Pinduoduo is the new trend on the Chinese stocks. Um, I I was trying to analyze Pinduoduo in the last year. When the Chinese stocks bottom last year, I was looking into it, but I didn't understand what Pinduoduo does. For me, it was another retail stock like Alibaba or JD. I didn't understand the potential. So, this video I will try to explain what Pinduoduo does and what is the moat and what is the intrinsic value. So let's continue with this video. So Pinduoduo. Pinduoduo is classified as a consumer cyclical. It's not Ireland, that's a mistake, it's in China. So what they do, they is basically a platform where people can do a group buy. They can share their coupons, they can buy products, agriculture products and a lot of things as a group, and they can have a lot of discount. It's do you see any similarities with Costco? Some. They with that group mindset, they can buy products at lower prices. They really love to buy at Pinduoduo. So I thought that Pinduoduo was another e-commerce retail company, but they are a platform. They don't sell products. It's just a platform for merchants, and they do some revenue from fees. It's actually 15%. The revenue is from transaction service. 7% of the revenue is from merchandise sale, and 77% it's online marketing service and others. So they do most of their revenue from advertising on their platform. That was my mistake last year when I was looking into Pinduoduo. I don't think they were able to have high margins in another e-commerce, but they just exploded this last year. They had the bottom around the summer last year, or in the beginning of the year. They were trading around $30, and they hit $100 in the beginning of this year. But at the moment they are in a dip. So year to date they are down 70%. In this last month they are down 25%. So it is an opportunity. So let's talk about Pinduoduo. It's an $85 billion market cap. Their P now it's around 21, and their forward P is around 12. That's low for the growth they have been. Their revenue have been growing at 137%. They are doubling revenues every year for the last 5 years. So that's really awesome. Their gross margin are around 75%. When I was looking into Pinduoduo last year, I never thought they could have so high margins. Last year they had net margin of around 24%. That's really high. Maybe that's a fluky. I don't know. I'm trying to understand that. I do not own Pinduoduo, but I'm looking into it in this drawdown. They are down from their year high. They are trading now at around $70, maybe even lower. I don't know the price now, but we'll look into it. So things we like: high margins, high growth, maybe raisable fair valuation. We will looking into it. So cash and debt, they have really low debt. They have a lot of cash in hand. They can pay all their long-term debt with the cash and they have in hand and still having a lot to invest in their business. So their return on invested capital last year was 90%, which is really high, and they are now turning profitable and really profitable with that margin. So that's something we really love. So if you check our money journey checklist, let's look into revenue growth. They are growing around at 37%. That's not, of course they will not grow at this rate for the next year. They are a really young company. If you look into their revenues, that was really low. In 2017 they are growing 652%, 139%, 97%, 57%. In this last year they grew almost 40% the revenues, and analysts are expecting them to grow this year at almost 28% and next year around 20%. Of course their growth will come down, but they are still growing a lot, and I think they have a lot of potential. They have really high margins. I thought that was e-commerce, but it's more like they have similarity. They are trying to do what Costco does in the US. They are providing the lower prices on China, but they are trading as an advertising company in their platforms, which is really high margin. That's really a good idea. I'm starting to really like this company. I've spent more than 100 hours starting to understanding this business, and now that I'm starting to understand, I'm really liking, I'm really loving it. So really low debt, high return on invested capital this year. Their moat is really high. As I said, they are providing the lower prices in China. Everyone is loving it. They are growing a lot. This is a moat. If you provide the better prices, if you are growing at this rate, you have a really high moat. So they are now free cash positive, and they are not, I put a check here, but they are not returning capital to the shareholders. They are just now being profitable, so I believe in the next year they will be, so it's a check. They are not doing dividends, but they were diluting the shareholders until now, because they have to have cash to continue growing. So that will be a check, I hope, for the next year. So, and about the fair valuation, until now this is a company we really like. I'm really loving it, and it's all check marks for me. So let's do our valuations. If they are trading at a fair valuation, I might start to buy this company. I'm already overweight on China, but I'm really liking this company, and that might be a good investment. So let's do our discounted cash flow. So for my base case, they are expecting to grow 28% this year, 2023. For 2024, around 20%. So I'm expecting China will continue to grow. They are coming from not a crisis, but they were in a lockdown and they are opening this year. So I believe that can improve. So 18% for the next 5 years and 12% for the rest. I believe it's a conservative analysis. So since this is a company with really high quality, even though they are Chinese, but I'm doing a small premium, PE of 16, just because only I really love the company. A discount rate of 12.5%. So my biggest difficulty here, it will be define what their margins will be. I didn't understand the company 1 year ago. Now they had 24% margins last year. Maybe that's a fluke, and maybe they will not have that high margins in the future. I don't know. It's a really difficult business. Sorry, but I don't know if I put 15%, but I'll put 20%. I don't know if it is conservative or I don't know, but I believe they can do 20% of my base case. For my bull case, I will put 23% margins, and I think they can grow at 22% and 14% for the last 5 years. 18%, 80 PE if they do that, 15% of discount rate. And for my bear case, my worst case, I believe they continue to grow. They have a wide moat, they're providing the better prices, so 15% for the next 5 years, and 10% for the rest, from the 5th to the 10th year, 17% margins. I believe that's a conservative analysis. So what is the fair value of this company? For me, my fair value for this company is 87. They have hit all-time high in 2021, I believe, at of $200 in the beginning of 2021. They hit a low of around $30, which was a really good opportunity last year. At the time I was looking into Chinese stocks, I did bought Alibaba, JD at a really good price, but I didn't understand Pinduoduo, so I thought they were just another e-commerce, but I should have take that opportunity, but I can live with that. It's okay. And now that might be another opportunity. They have been down this year, just like JD. They had an awesome year last year, and if they continue to grow at this pace, that might be a good investment. I really like the company. That's a really good company. So that's my price. My intrinsic value, it will be around 87. Maybe I'm not conservative enough, but I'm really liking this company. It's a really good company with a high moat, maybe even bigger than Alibaba. I don't know, but that I thought they were like rivals in there, but it's a different business that Pinduoduo has on China. So a really good idea. I really like that. They are like a platform for merchants, so that's a new idea, something different, and I really like. So they are trading now at $67. They were trading around $100 in the beginning of the year, so that's maybe it's a dip and maybe an opportunity. So I will continue to look into it. I don't know if I will buy it because I'm really overweight on China, but I might put the trigger, and I really like it. So don't look into what I say. If you like the company, just do your due diligence. I really like the company. That's a really good company, Pinduoduo. I really like it. So that was one of my favorite videos to do. So if you like the company, if you like Pinduoduo, if you like my analysis, so please subscribe, and till next time. Bye guys.